Token Metrics is a cryptocurrency investment platform that helps users leverage machine learning to become better crypto investors. Our in-depth analysis helps eliminate the emotions of investing, find profitable investment opportunities, and filters out scams. Learn more at tokenmetrics.com.
We are live. Welcome to the Token Metrics Monday live stream. If you need a roadmap in crypto and you need to make money in crypto, then like and subscribe to this channel. I'm your host, Bill Noble, and this show is brought to you by tokenmetrics.com. I'm joined by my colleague, Forrest. Forrest, Happy New Year.
Happy New Year, Bill. How are you?
I'm good, sir. I'm good. Always glad to be with you. Let's take a look and see who's on the stream first. Crypto Student, Megan Owen, Wax, Angela, welcome. Okay, James Ostrom, Crypto Technology. Welcome to the stream. Hello from Italy. Yes, let us know where you're coming in from, and snowy New Jersey. All right, Forrest, how about taking us through the agenda?
Yeah, absolutely. So, of course, the first thing I did here was, as I'm sharing my screen, I tweeted out, shared this live stream out on Twitter so that other people can come join us. So, Token Metrics live stream, altcoin picks for January, Defi Comeback, Token Metrics live stream. Follow us on social media, on all these different social media platforms, Twitter, YouTube, Instagram, even LinkedIn. Yes, we are hiring. So go check out Token Metrics on LinkedIn if you're looking for a job in crypto. Subscribe today at tokenmetrics.com for incredible AI-driven and machine learning-driven dashboards and insights and research in the crypto space. Excuse me. Token Metrics agenda, we're going to start out as usual with the legendary Bill Noble market update. I'm going to walk through some altcoin charts from a trading perspective, centering around this idea of this DeFi comeback. How do we get back involved with DeFi after it's bottomed out and looked so bad for so long? Now we're already starting to see a couple of altcoins come back. Crypto Showdown, as usual, we'll go ahead and show you the Crypto Showdown options. If you want to participate in Crypto Showdown, you can use the Menti code that we're about to give you. Then Bill will follow up with altcoin overtime, and then we'll have a little quick live Q&A session. So if you want to participate in this live stream and interact with this live stream, go to www.menti.com and use the code 1899069. That should be in the description below, so you don't have to pause on this screen. Before we jump into the market update, I just want to show you guys Crypto Showdown, top altcoin picks for January. Yearn Finance, Sushi Swap, or Phantom. Let us know which one you think is going to do the best in January by going to menti.com and using that code to vote for your Crypto Showdown winner. And without further ado, let's jump into the market update with Bill.
All right, thank you, Forrest. Sharing my screen now. All right, now before we knock into the market update, shout outs to California, Pakistan, Lithuania, London, Canada, Virginia, Louisiana, Austin, New York, Boston, Belgium, Florida, Portugal, Greece, the Azores Islands. Welcome, welcome from all across the world. Here is your market update. 2022, the plan, the beginning. Africa, Slovenia, Wisconsin, and Kansas, welcome. Now, let's go through. Let me get the PowerPoint going. Okay, let's start with the dollar. So I'm going to make a little bit of a tweak to the market update. I'm going to just let you know and update you on the things that I'm going to track that I think are going to be important for this year. So if you've been watching the market update, you know that I'm always annoyed when the dollar goes up. Dollar index today, DXY, taking off, trying to get back above its 21-day moving average like it did in October. So here is a very important question for people in crypto. How could the Fed print $6 trillion in March of last year, $6 trillion over the prior 12 years, and $2 trillion since the last $6 trillion, and have the dollar keep going up. How could they print all those dollars and still have people in the foreign exchange market buying them? Like, isn't the dollar supposed to go down? Well, yes, but it's not. And the thing we need to answer, the question we need to ask for crypto is why? Okay, let's start with the euro. So we've got all our friends in the house from Europe, and let's talk about the euro. Now, the euro is, for anybody who doesn't know, is the currency of continental Europe. They have a particular issue over there where they've got some economies that are stronger than others, and the European Central Bank has had to come in when they print money and literally buy all the government debt of certain countries, Italy, Spain, Portugal, etc., right? Because the European Central Bank didn't want those economies to get hurt by some of the things, that they were worried about in 2010. So the European Central Bank helped save its people. We definitely want to save our friends in Europe. But inflation is out of control everywhere, especially in Europe. Now, what is the solution to inflation? Central banks raising rates, right? So you might ask yourself, well, if when rates go up, bonds go down, and the European Central Bank have literally bought all the government bonds in Europe, how is the European Central Bank going to raise rates without blowing itself up? The answer is they're not. They're not going to raise rates. Slight aside, interest rates in Europe are negative. So the European Central Bank can't do anything to stop inflation. This could be why the euro might go down. If you look at this monthly chart, there's a head and shoulders top in the euro. So this could mean dollar up and euro down. Now, is this a trade to be done today? Probably not. But dollar up, euro down between March and October may be a huge theme. It's definitely going to hurt stocks, and it might hurt crypto. So, as a hint, if you're going to make money in crypto, you got to do it in the first quarter and the fourth quarter of this year. And the value of euro against the dollar, along with the dollar index, is something that you need to have in your trading view. It's the thing to watch in legacy. Now, another thing to watch in legacy, way outside the box. Again, why is the dollar going up? Well, it could go up because there could be a problem with emerging market currencies. What's one of the biggest emerging market currencies? The Brazilian real. We love our friends in Brazil, right? But if I was looking at this chart and I said this is an altcoin, you'd be like, oh yeah, Bill, that's going to 3x. Well, it's not an altcoin. It's the value of the dollar versus the real. So if the dollar goes up a lot, the real could go down a lot. And this chart, to me, looks pretty bullish for the dollar. So that could mean COVID or some other problem could hurt the Brazilian real. Dollar up, real down. Now, this will eventually be bullish for crypto. The question is, when will it be bullish for crypto? My take, either the first quarter of this year or the fourth quarter of this year. The Russian ruble. Yes, the Russian ruble. Everybody thinks the problem with Russia is the Ukraine. I disagree. If I look at Gann cycle analysis, looking at 44-month cycles, you go back to January 2014, there was a big rally in the dollar versus the ruble. Similar but smaller move happened in 2018, and it is very possible another move like that could start. Dollar up, ruble down. Now, maybe you didn't understand that. Okay, I got it. How about this? How do you think Vladimir Putin's going to react if his currency crashes versus the dollar? How do you think he would react if the reason his currency crashed and the dollar went up was because the Fed started hiking rates? Remember, Goldman Sachs thinks there's going to be 9 rate hikes between now and the end of 2023. So if crypto sucks at some point this year, it could be because the dollar's going higher. You need to have these things on your trading view so that you can watch them. Now, just in case you think there are no problems in the world, I will remind you that Hang Seng is the stock index of Hong Kong, which is very reflective of what's going on in China. That stock index has failed at its 21-day moving average. It's also at its September 2020 low, not its 2021 low, the September 2020 low. It has completely crashed. So can you imagine if there's a problem with the currency in Brazil, the currency in Europe, right? Stocks in China. This is a recipe for two. We're done with that. It's crypto up. So again, something to keep on your radar. Now, U.S. stocks. ARK Investment. So I'm going to use ARKK. Those are speculative tech stocks held by Kathy Woods' fund. My idea for U.S. stocks goes like this. Up until March. So ARK might go from 96 to 117. Then starting with sell in May and go away, ARK is probably going to go from 100 something all the way down to its into October and probably retest its March low. In other words, sometime between April and October, there's going to be an ugly event in U.S. stocks. So higher rates, higher dollar, COVID, it doesn't matter what causes it. My Gann work says first quarter or fourth quarter is where you make money in crypto. And you're like, well, hey, wait a minute. What happens in the meantime? Well, what happens in the meantime is that there's a problem in legacy, social disorder, who knows? The bottom line is, if you're going to make money in crypto, my suggestion is you do it between now and March and between October and December. So that means we got to make money, get in stable coins, and then when everyone's screaming and crying, you pile in size, not investment advice. So now that I've given you the legacy stuff to watch, I know that was a lot, and I appreciate you bearing with me. So in the first quarter of this year, if the dollar can hold itself together, right, Bitcoin should do good in January. In other words, I know there was profit taking. You can't read into what happens the last day of the year and the first day of the year. So Bitcoin not doing much, kind of has to be above 48K to get excited. Probably has to be above 53 to get excited. But I'm expecting decent Bitcoin price action to the upside in January. Why? Well, because everyone's got to get out of the dollar. Everyone's got to get out of European currencies, get out of stocks, and just buy some Bitcoin through the Bitcoin ETF, right? They got to diversify. How can you think I'm the only one that can see those charts of things not looking so good for certain currencies and certain stock markets? People got to buy crypto, and they're going to do it in January through the Bitcoin ETF. So Bitcoin's not looking great right now, but Bitcoin and crypto are set to have a pretty decent first quarter. Now, ETH, it's the same thing. It's like, oh, God, can this thing ever get out of its way, right? The 29-day moving average is at, 3,900. I'd love to see it above that. It's never paid to sell ETH when it's quiet. Normally, when ETH's quiet, it's eventually going to go up. Now, I think ETH should have gone up in December, but it didn't. So here we sit. I think if there's money to be made in ETH, it's going to be between now and March. If I had to say buy it or sell it at 3,700, near support, I'd be like, let's buy it. Not investment advice, right? Buy or sell at 3,700. My inclination would be to buy. Now, render, okay, metaverse. Here's a prediction. I know all of crypto moves together. And I know if there's a huge legacy event that, yes, crypto will be affected by that in the middle 6 months of the year. But I think there is going to be a monster move in the metaverse. And that monster move may be through NFTs, and it may be throughout the year. So it may be the tokens in first quarter and fourth quarter, and NFTs with functionality connected to the metaverse may actually do well all year. And I would suggest the possibility that some metaverse coins actually don't get caught in the equity market decline. Now, right out of the gate, everyone's buying render. A 3D imaging coin, Multicoin has invested in this. So have other VCs. Very interesting that all the selling looks like it got done last year and it's popping back up again. Through the 21-day moving average, 8.5 is possible if 465 holds as support. Sandbox. Remember how Forrest says buy quality products, quality projects at good entry points? Well, Sandbox broke through the 21-day moving average and it's retesting it at 564. 21-day is support. It comes to support, buy it or sell it. I'll leave it up to you. Okay, Luna. Okay, huge DeFi play. You got to go back and watch all of our videos. We think this is great, but we have told you we think it's great on a dip. So support in Luna is at 76. Luna might dip while other DeFi coins take off. You don't know. Or Luna might trade in a range. So Luna is a great DeFi play. Luna could go up a lot, but you want to make sure from this point out, you're buying it when it's at support, not doing a FOMO trade. We'll get to some coins later in this program where we think, there's some urgency to jump in now, so don't go anywhere. Synthetics, right? The coin I loved at 12 that went to 5, it broke through its 21-day moving average and has put in 3 straight green candles. Yes, curves to 40, says Bobby. I've got a curve chart I believe in here. And if I don't, I agree. There are DeFi coins out there that can go up a lot. Wait until you see Forrest work on that. Stay tuned. In the meantime, synthetics, okay, I don't know. Synthetics has got room up to 8.5. If you can get yield on synthetics, okay, DeFi 1.0 is restructuring itself. Okay, Solana, okay, a layer 1 that was a big hit last year, but it can't get through 180. Now, you're going to have to get used to some things going up and some things going lower or sideways. Now, I would much prefer if Solana exploded through 185 and we could get DeFi and layer 1s going. But right now, Solana can't get through 180. Now, that means you might be able to buy Solana at 100. I would rather have it break out now, but right now, it looks like a head and shoulders bottom. A head and shoulders top. And it looks like the layer 1 trade is elsewhere. Let's put it that way. Where is it? Stay tuned. Okay, Avalanche. Avalanche is starting to act like Solana, unfortunately, right? It's so fun to see Avalanche up on market down days. 21-day moving average is at 109. I want to see Avalanche hold. If it doesn't, it could be reflective that the layer 1 trade has gone somewhere else. Where has it gone? Well, maybe it's gone to Cosmos. Cosmos is really more of a layer 0. Okay, our work on Cosmos, my colleague Mehdi and my colleague Dylan did work on Cosmos on YouTube, and I am proud to say that Token Metrics was all over this at the low. Okay, Cosmos bottomed around 25. My Gann work on this chart shows 50 is possible. Okay, other more conservative work shows resistance at 40. So maybe the play in Cosmos is to wait for it to break through resistance at 40, retest 40, and then if that happens, 50 is possible. Bottom line is, don't FOMO, but do not underestimate how much Cosmos and the Cosmos ecosystem can rally. Okay, particularly in the first quarter. Phantom. Okay, we were on this at $1.42. I like the chart, held at a big fib point at a 62% retracement level. TVL in Phantom is rising, and Phantom in 10 words or less may be, keyword, may be cheap relative to the total value locked into protocol. This looks like the next avalanche. Okay, a new high is possible. If it really gets going, I have levels above the market at 427 and 882. I know a lot of people have been asking on the stream about Phantom, and I think the Mr. Market is telling you that there's some major league action to be had, especially if we're going from a crypto market to a market of cryptos. You're like, Bill, what does that mean? Well, it comes from the stock market, right? Instead of saying, oh, it's the whole stock market, we say it's a market of stocks, meaning you're going to have to be a stock picker or a crypto picker in this market because the market isn't going to go up or down at the same time. So if there is such a thing as something that can go up in a sideways market, it's probably Cosmos, Phantom, and of course, Near, right? We talked about it at 9. Everyone got stopped out. It went to 6. That was the bottom. It went straight to 16. And now the irritating thing that Near is doing, instead of sitting and stopping, it's not dipping. Okay? It went to like the old high in October. You had 1 day to buy it. Now it's gone up. It's sitting on a 23% retracement fib number, and it's rallying. Most likely, Near can go to 19. If Phantom goes to 9, Near can go way beyond 19. Not investment advice. The way I think of Near, I think it's like a layer 1 that also has a shot at polka dot level functionality. It's complicated, but it's really, really, I don't know, dare I say, cool. So Phantom and Near looks like where the the layer 1 trade is going. Now, Chainlink. What did Chainlink do last year? Nothing. Okay, a lot of times you want to buy stuff that people are frustrated with. When Chainlink broke 23, even I looked at this and I was like, wow, this could be done. But guess what? That was kind of a trap. And Chainlink held support at 15, and now it's trying to get back into its range that it was in between 23 and 37. Now, if something breaks the bottom end of the range and then comes back into the range, basic technical analysis would state that it can go above the top end. So if you get a false break through the bottom, you can get it to turn around to where it goes back up through the top. So if Chainlink is above 23, it can go to 37. If it goes to 37, it can go through 37. Now, let me ask a crazy question. Why can't Chainlink go back to 50? Right? In other words, if everybody gave up on Chainlink, everybody was scared, right? But what happens if there's nothing to be scared about? What happens if a DeFi renaissance means Chainlink? What if everyone's like, I don't want to buy that? What happens if that's the thing that smokes higher? Or someone says, oh, I don't want to pay 23 for Chainlink. It was at 15 and moves over. I could see people talking themselves out of it. And if Chainlink is above 23, I think you should be talking yourself into it. DeFi Perp, okay? Some fib circle analysis way outside the box, okay? This is the first time where after hitting a big fib number, DeFi Perp has actually managed to bottom on top of the 21-day moving average. So on top of the 21-day moving average, somebody wanted DeFi. And it's pretty simple, folks. Forrest will detail it. People need yield. Inflation's 10% at least, so you got to get 7 to 10% somewhere. And everybody knows it. So if DeFi 1.0 can retool itself, DeFi has traded well, right? People need yield. Okay, Aave breaking above its 21-period moving average and a trend line on its 3-day chart. Okay, Aave can come back. Polkadot looking for a rally near our January 9th GAN date. My fundamental team is telling me that developer activity in the Polkadot universe is exploding. Chainlink could be in the same category as Polkadot, a range-bound, slow-moving, big-cap crypto that catches everyone off guard in the first quarter the way Cosmos caught everybody in the fourth quarter. So it's almost like, from a price action point of view, what's the next Cosmos, right? Phantom, Near, DeFi, Chainlink, Polkadot are stuff to think about. So don't go anywhere because altcoin overtime's coming up. And I'm going to turn it back over to Forrest, who is going to, give us his TA wisdom on, not only Bitcoin and Ethereum, but other coins as well. Forrest.
Thank you, Bill, for that market update. Oh, excuse me. Thank you, Bill, for that market update. I hope you guys can see my screen. I want to just highlight something that Bill mentioned. And I don't know the exact phrasing he used, but what it boiled down to is that it's not going to be a crypto market anymore, potentially. I mean, that's what we're already seeing, but rather a market of cryptos, meaning what exactly what Bill said. You're going to have to pick the correct cryptocurrencies, and if you don't, the market will punish you. You're also going to have to pick the correct entry points, and that's where some of my analysis is going to be coming in. This is total cryptocurrency market cap. If you bought anything, this is all cryptocurrency, Bitcoin plus all altcoins. If you bought somewhere back in May of 2020, or even you caught the dip off of the pandemic news back in March of 2020, it does not matter what cryptocurrency you bought. 99.9% of cryptocurrencies you made money on year over year to the peak in March of 2021. And you had very, very little volatility. I mean, the steepest, nastiest corrections were 25%, and which is really, really nothing, not bad at all. Now, look at the change in the crypto market that we've had since May of 2021. We've had extreme swinging volatility, extreme volatility. These corrections have been really, really rough. We've seen cryptocurrencies that were overvalued in May of 2021 just not completely bounce back. Yet we're still in a bull market, enough so that individual cryptocurrencies like Luna, like AVAX, like Phantom are making new all-time highs. They've bounced back and they're printing money. So if you're in the correct cryptocurrencies at the correct entry points, you can make tons of money on these up moves. But if you pick the wrong cryptocurrencies, not only are you not making money, you're losing money, right? In May, if you bought in May of 2020 and you were in this bull market, the consequences of picking the wrong cryptocurrencies was that you just made a 2 or 3x instead of a 30x, right? So the punishment really wasn't that bad. You still tripled your money, right? So it's really, really important to identify some of the narratives that we're seeing and jump into those narratives and be willing to be a little bit more flexible in terms of trading in and out of cryptocurrencies, at least. And this isn't financial advice. And if you don't know what you're doing trading and you don't know how to set a stop loss, that's fine. We still want to zero in on really, really good entry points for even some of our longer term investments. So right now I'm going to jump into several coins that are in the DeFi sector. And I strongly believe that this DeFi sector is seeing a comeback. It's seeing a renaissance, as Bill mentioned, right? Yearn Finance, Sushi already bouncing back upwards. Chainlink is actually down compared to its all-time high of $52, $53. Its May high has not recovered yet. It's actually pretty low. But what I've done is I've kind of drawn this long-term channel for you. And I think Chainlink is just a very strong accumulation play. I'm not going to give you extremely specific entry levels like I am for some of these other cryptocurrencies, because Chainlink almost doesn't trade quite like that. It almost trades poorly over shorter term time frames. It's a little bit more erratic. However, if you just look at the long-term time frame, we're trending upwards. And what you'll notice right now is we're actually at the bottom. We're at the bottom of this trend channel. And historically, that's just been a phenomenal place to accumulate Chainlink, right? So I think Chainlink right now is one that you can just accumulate in for under $26, $27. I think that is the inherent value of Chainlink currently as it stands from a technical analysis perspective, based on calculating the margin pressure levels from our high and our low. We kind of have these two lines in here that are, I'm not going to go into exactly how I calculate these margin pressure levels. I've done that plenty of times on this channel in the past, but basically suffice it to say $26 to $27 is kind of a magnet for the price. And when price for Chainlink is under this level and bouncing off of this trend line, I think this is a fantastic place to accumulate Chainlink. Anywhere between the bottom of this trend line, around 17 all the way up to maybe $23, and below this $26 to $28 range, right? So that's where I'm looking to accumulate Chainlink. I personally just bought some today. I prefer to buy on the trend line. We are a little bit over the trend line, but we're still in the bottom of this overall channel. And if we saw Chainlink move back towards the middle or the top of this channel here, I'll just give you a scenario where maybe it just comes back to the middle of this channel sometime in Q1 or Q2 of this year. We're looking at $60 Chainlink. We're looking at a new all-time high. If it were to get back to the top of this channel this year, we're looking upwards of the high $100s, right? So just under $200. I'm not saying that's where it's going. I'm just saying that right now, while Chainlink isn't the talk of the town, it's giving really, really good entry points. And what you'll find is that if all you're hearing on YouTube and Twitter is Chainlink is the future, it's going to change if that's all you're hearing, chances are we're at the top of a range, right? And the risk of buying in at that range when it's overbought and everybody's buying it, everybody has Chainlink in their portfolio. Not only does everybody have Chainlink in their portfolio, but it's a 20% allocation in everybody's portfolio. That's the wrong time to buy. The right time to buy is when nobody's talking about it. The only people with Chainlink in their portfolios are the Link Marines, right? The people that believe in it a long time and have believed in it for a very long time and have been buying all along the way at prices much, much lower than what we're at today. So Chainlink, solid fundamental cryptocurrency with good tokenomics and phenomenal use case, undervalued right now against its key support and resistance levels around $26 and $27. Next up is Phantom, and it's a layer one solution, so it's not a DeFi dApp or application per se. But what we're seeing with Phantom TVL is a lot of TVL moving into Phantom in the form of DeFi being built on Phantom, and in the form of projects integrating Phantom onto their applications, or moving their applications and making them compatible with Phantom, right? So if we look at DeFi Llama here, this is just total value locked in all these layer one solutions. If we look at all TVL, we've been flat really since November. We've been flat for roughly the last 2 months, around 254 billion. If we look at Ethereum, right, we've kind of been declining in a bit of a bounce back, but overall pretty flat. Terra Luna went parabolic, but it's since cooled down, come down. It's dipped all the way down here to 18 billion. It's back up to almost 20 billion, right? But kind of in a bit of a slump off of this most recent push. Binance Smart Chain, TVL, flat. Avalanche had a big rally, but since it peaked, it's been flat at 12.25 billion. Solana had a huge rally, mainly flat TVL. Phantom had a huge rally, was flat, slight decline. But now more recently, if we zoom in here, we can very clearly see that TVL on Phantom is picking up. Not only is it picking up, but it's making new all-time highs. We're seeing value move into Phantom, just like we saw it move into Avalanche, just like we saw it move into Solana, just like we saw it move into Terra Luna. We're seeing Phantom pick up in TVL, right? So I believe there's a very strong chance that Phantom is the next layer one solution to really push its way into the top 20, top 15 cryptocurrencies by market cap, right? If we just look at Phantom's fully diluted valuation of about $8.2 billion, and then you look at its TVL of $6.7 billion, you can see that it's really, really undervalued compared to the way that other protocols, other layer one protocols and smart contract networks are valued based on their TVL. Terra Luna has $19.7 billion in TVL, roughly 3 times the amount of Phantom. Yet Terra Luna has a $93 billion fully diluted valuation, right? More than an 11 times higher valuation. So let me put that very simply and very plainly for you. Despite the fact that Terra Luna only has 3 times more money locked up in its protocol, it is valued 11 times higher than Phantom. And that's not to say that Terra Luna is overvalued, because I don't think that Terra Luna is overvalued. I think that this means that Phantom, in comparison to the way that other layer one solutions are being valued right now, is actually undervalued. And if it were to catch up, we'd likely see a 2 to 4x, 3 or 4x. If we saw it just catch up to Terra Luna's value parity, its ratio between TVL and fully diluted valuation, we'd likely see about a 3x out of Phantom. So somewhere around $7 to $8. So I absolutely do think that Phantom can run and be the next cryptocurrency to the next layer one solution to reprice all the way up in this range, right? $6 to $8 as a layer one solution. All right. So that begs the question, where do we actually want to get into this thing? Well, it is running. And I actually bought some Phantom today on the breakout of this previous high. It took out this high of about $2.66, and I bought a little, right? Didn't go all in on it. This is just a trade for me. I want to catch part of this run, hopefully to $5, $6, $7, $8, right? And I know there's going to be resistance at its previous all-time high of $3.50, but I want to be careful, because if Bitcoin crashes and Bitcoin's testing 46K again, and if it drops below 46K, it could easily crash down to 42K, 44K. It could wipe Phantom down with it. In which case, I want to have some stable coins on the side to add to my Phantom position should it drop back to this horizontal support level. This horizontal support level is at about $1.90. That would be, again, on the top of this downtrend line. Right. So we want to look for it on the top of this blue downtrend line, which is already found support off of. We also want to consider a purchase if it were to drop to this long-term red trend line. This long-term red trend line has historically been a really good place to accumulate Phantom. Now, it did dip below this trend line, but this is a very long-term trend line. Right? This has been a very, very strong trend line. And if we do see Phantom drop to it, you will see me buying and accumulating more Phantom in this long trade, right? So I think anywhere between this breakout here today and any retracement we get back down to this trend line is fair game for Phantom if you're willing to take on the risk, right? And you're willing to hold, and your thesis is in line with where I believe it's going to go based on its undervaluedness against other layer one solutions. So targets would be anywhere between like $5 and $8, which we can be more specific in picking once we see some more levels made, some more support and resistance levels made. All right, Sushi Swap. Everybody aped into Sushi Swap. A lot of people, unfortunately, aped in around $8 to $11 after it was already overextended. Guys, even when fundamentals change, even when things are really, really, really solid and look like they're not going to come back down, price gets exhausted profit takers, the people who bought sushi when it was originally breaking out of this pattern, this downtrend back here, $5.86, they, as soon as price drop comes up above $10, they've 2x'd in a matter of a few days, in a matter of like a week and a half, 10 days, they've been able to 2x. They're going to be taking profits, right? They're going to be taking profits. That's going to drive price back down. In order to get involved in sushi and feel comfortable with an entry point, right? Because sushi's looking really solid fundamentally. Maybe it turns around here, right? Maybe it does find support here and move upwards, in which case I'm personally not going to jump in. I want to be very comfortable with my entry points. Where do we have support? I want to be buying on support because that's where I would expect a bounce. We have support, our first leg of support here, between $7.63 and $7.90. And that's where I'm comfortable buying based on calculating the margin pressure levels off of our highs and off of our lows, right? That's where the incentives to buy on leverage and the incentives lower to sell on leverage to favor a bounce. All right. So yes, I'm giving you guys this level of $7.63 to $7.90. We may not get there. And people may be upset that sushi got away from them. But it's just not worth it, in my opinion, in a market that, again, I'll cut over here, in a market that is this volatile, up and down, up and down, up and down. I mean, we could fall out of this pattern. We could pump back to the top of this pattern. We don't know for certain what's going to happen here. So in a market that's this volatile, I'm not going to force a trade just because I'm FOMOing, because the fundamentals on sushi have changed a little bit. It looks a little bit better. No, I'm going to wait for it to give me a really good price that I'm comfortable with and would expect a bounce from, right? So that's our first entry point. And then our second entry point, if it falls through this, where we potentially want to double down, is our previous resistance here at around 674 to 712. These, again, are margin pressure levels based off of our local low down here and our high up here. All right, Year in Finance has already started to take off again. I've got some key levels to watch here. This is a bit of a difficult trade. So and I say difficult trade, I mean, I say that because it's already hit our key entry point here, right? So our all-time high was $95,000. That's going to create some resistance up here at the 2x short level at 47,500. So before we even get to 47.5K, we need to understand that there's going to be some resistance there. We can see that previously, right after we made this all-time high, this 47.5K level was very hard resistance. It's what, when we failed, sparked us all the way down to 26K or below 20K, right? The reason this is resistance is because that's where you can start to short Year in Finance. You can go short on Year in Finance and keep your liquidation point hidden above that 95K all-time high. And that's a pretty safe bet considering most of the price action is well below this 95K level. So if we know 47.5K is going to be tough resistance, right? So we don't want to buy too much higher than 47.5K. In fact, we want to make Year in Finance prove itself and go up above 47.5K. And then we'd want to buy 47.5K potentially as support. Similar to what we just saw with 28,278. This is the 3x long of our local low. That's where the incentive to long on 3x leverage increases. It's also very close to this kind of trend line, right? So ultimately, what happened is we popped up to 37,700, our 2x long level. This is the level at which the incentive to buy on 2x long leverage dissipates. It caused a correction. The 3x long leverage incentives came back in down at 28,278. And that's where our ideal entry point would have been for Year in Finance on this correction. Now, hindsight's 2020. What do we do now? Well, we want to make support on top of this 2x long level, which is on a shorter term time frame. If we zoom in here, exactly what we're doing. We popped up above it and now we've tested it as support. This, honestly, not the worst entry point. I'd like to see a nicer, cleaner retest, a multi-day kind of spend a lot of time above this level and then retest it to buy. But it's not the worst entry point to grab some Yearn Finance, some YFI at 37,704 after we've made support. But keep in mind, we could very, very easily, right, very easily drop below and come back down to this trend line. And that's honestly where I would be a bit more keen to purchase Yearn Finance, down on this trend line, maybe a little bit above 28,000, maybe around 30K here if we can find a nice clean retest. Maybe we bleed off similarly to how we did before the crash in early December, but I wouldn't mind finding it down here rather than forcing a trade on a very short retest of this level. Alternatively, if this continues to run and continues to break out, let it run all the way up to 50, 60K or however high above 47.5K it goes, and then know that you'll very likely be able to buy the retest on 47.5K. On 47.5K. Right. But I don't want to play, personally, I don't want to play the breakout. I want to play the retest. Last one here is Perp. Perp is a decentralized derivatives exchange play that could, in my opinion, be huge in the future. We know that DYDX is already does a ton of trade volume. If Perp could capture some of that trade volume from DYDX users, it would be absolutely massive. This Perp is not something that trades according to technical analysis very well. It's very heavily correlated with the staking rewards, which are heavily based on the trade volume that's done on the exchange, right? So the price of Perp tokens are heavily correlated to the trade volume done on this exchange, right? So we can see at launch, right, we had basically what I'm going to refer to as trade volume down in this range. Right? Then we had speculation bring it above this range. I want to be accumulating Perp. I think Perp is an accumulation play down below this range where we know that this token can trade. We know Perp tokens can trade between $11 and $26. And I think that the platform growth will exceed, and the trade volume will exceed these levels in the future, right? But right now, trade volume's a little bit low, in my opinion, to be accumulating well below $11. Right now, we're looking at about 9 cents. You can also stake Perp tokens for pretty decent staking rewards. Last time I checked, it was around 20 or 30%. I don't know what it is currently. Full disclosure, I own Perp tokens and I stake them, right? And I'm planning to continue to accumulate them under $11. Our live stream schedule. I want to jump right into Crypto Showdown. So the 3 cryptocurrencies in Crypto Showdown for the top altcoin pick for January of 2022 are Yearn Finance, Sushi Swap, and Phantom. Bill, what's your take on this?
I got to go with Phantom. I just think it's the next parabolic play. You know, that said, Yearn will probably go to 100, but I go with Phantom.
I'm gonna. So normally I try to go with something different to kind of cover our bases here, to play devil's advocate, but I can't disagree with you. I can't disagree with you here. We have continually seen layer ones take turns. You look at all these layer ones: Binance Smart Chain, Terra, Avalanche, Solana, Phantom, Polygon. Polygon's not a layer one, but we just continually see this layer one narrative, and we know that they can reprice very quickly, very aggressively. And just knowing that Phantom's fundamentals are so strong, I'm too going with Phantom. So let's see what the winner is here. Phantom. Phantom was the winner. Everyone agrees. Looks like Phantom is the top altcoin pick for January of 2022. All right, Bill, do we want to jump into altcoin overtime?
Yes, we do. All right, let me make sure I'm shared here. All right, somebody's asking, are you guys from Jersey? Well, I am. Forrest is not. So Jersey in the house, we appreciate you tuning in. And without further ado, here is altcoin overtime. Forrest just mentioned Perp. There's a lot of GAN support at like around $9, somewhere in there. 21-day moving average is at 920. Okay, if Perp holds support here and pops, it could start another uptrend. If Perp doesn't do anything, then it's still in range accumulation mode. Now, just in case you're wondering, a brief moment while we pay some bills. This is the Coinbase daily index from tokenmetrics.com. Notice that Cosmos, Polygon, Sushi, Yearn Finance have been in the daily index for the last 7 or 8 days. So if you're like, I can't believe I missed these coins, how could I have gotten in on those up moves? The token metrics indexes pick the best ranked coins that our AI system comes up with. So if you were day trading, okay, over the last 6 or 7 days, you would have benefited from using these indices. Now on back to what Forrest said. If you see dips in Sushi, Yearn, and Polygon, and they remain in those daily indices, that means the AI agrees with Forrest on buying the dip. So not investment advice, but if the AI confirms what you see in TA, confirming what you hear in the fundamental story, that can increase your trading conviction. Okay, if I've got this right, Matic has returned and dipped back to its 21-day moving average. Matic has paid you to buy it on the 21-day moving average. The theme of this altcoin overtime is shoot your shot in the first quarter. There's going to be a huge speculative shockwave in crypto. I think it's either in Q1 or later on in the year. Okay, sell in May and go away is a seemingly good thing to stick with. So if you're going to make a trade or you're going to try it and you've got a good project at a good entry point, go for it and put a stop in. Not investment advice. Shoot your shot. Okay, Yearn Finance, as Forrest pointed out, resistance at 46K. Okay, Yearn Finance broke out, came straight back to the 21-day moving average at 27K. We highlighted that on the show, and then it went straight up. So it looks like Yearn Finance probably wants to come back to say 35 or 36K. If it does so, and you're a Tokenmetrics subscriber, and you see Yearn Finance being flagged, even in the event of a correction, that's a signal to shoot your shot. Kraken, okay, Polygon, Cosmos, Sushi, Aragon. Also an indication of some caution, okay? It wants to buy Pax Gold. Maybe that's a one-day event. Maybe that's a couple-day event, all right? I say Pax Gold, per our quant analysts, can be a great diversification play in a portfolio. Okay, Binance, looking at Near, Helium, and Sushi, right? It's not a crypto market, it's a market of cryptos. So these are cryptos that our artificial intelligence is looking at. Celsius, Polygon, Sushi, Railgun, okay? That's from Uniswap. Now let's talk about Celsius. All right, Celsius went up, broke the 21-day moving average. Now it's coming back down to 397, right around the 21-day. So if Celsius is going to go up, it's going to hold the 21-day. If you think Celsius is going up and you believe in good projects at good entry points, and you believe that in the first quarter, you've got to shoot your shot, then I'm going to leave it up to you. Good projects, good entry points. If there's a time to take risk in crypto, it's the first quarter of this year. Sushi, okay, it goes up to 10. It goes to what I call the heartbreaker diagonal resistance line that broke my heart twice. Now it's coming off. The 21-day moving average is at 736. So if you get the flash dip in sushi and there's people down there at 7 and change, then you know it's good. If the AI continues to like it, even after a flash dip, you have some idea that, there's more upside in sushi. Okay. I don't think you have to FOMO in, because FOMOing at 10 hasn't worked, right? So on the dip, you want to see if buyers show up on the 21-day moving average. Now, Sol, right, an NFT and gaming layer 1, looks like it's trying to break out through 3.5. 3.5 is resistance. So I don't know that I'd be buying it unless it did one of two things. Hung out just below 3.5, because that was a theme from last year where consolidation below resistance was bullish, or it breaks out above 3.5, comes back down and hold, then you go with it. Right now, it looks kind of overbought and maybe like you should take profits. Okay. Or if you missed it, just wait. Just wait. Now, Algorand, should you wait or shouldn't you? Right? Algorand had everybody selling every uptick above 2 all of last year. Then all of a sudden, Algorand breaks above the 21-day, comes back down and holds, and now it could be off to the races. I think if Algorand is above $1.86, you could be looking at a move to 3. The way I would play it is let it break above $1.86 and come back down and retest. I don't think you have to just massively FOMO into everything. The market is going to give you dips. So don't buy on the first approach to resistance. Buy it after a breakout and on a return move. So if you're looking at Algorand, your pivot level is $1.86. Flux, okay, this is what I was talking about. This is what Harmony or Algorand could wind up looking like. So you break above the high, a multi-chain oracle here running on near. It breaks out, and now it's doing this like consolidation return move to the old high around 279. I think if Flux holds 279 as support, it's poised to go up, right? But we have to see if the old ceiling continues to act as a floor. If it does, this uptrend can continue. Engine Coin, okay, broke above the 21-day moving average, came back down to retest it, all right? Looks like it's going to run away from you, but it stops, and it's coming back to the 21-day, so it's giving you a dip. So if you were going to buy Engine Coin or you liked it, right, theoretically on charts, it's a good project at a good entry point, not investment advice. So if I'm right that the Q1 is the time to speculate in altcoins, right? It's the time where rising dollar and the Omicron variant keep the Fed on hold until March. If that's true, then you can speculate in altcoins, right? EFI. I mean, folks, if you were ever going to shoot your shot, the 21-day moving average is at $1. There's a diagonal support point at 91 cents. If you were going to take a shot, take a shot. Not investment advice. I mean, this could continue to go lower, but if our thesis is right on altcoins, then you want to buy stuff either when it's destroyed or when it's destroyed on support. So it's not above the 21-day moving average, but it is holding on a support point. Find a support point and take a shot. You can't take a shot and make money in the first part of this year, okay? It's going to be tough going when it comes to sell in May and go away. So make your money now. Now, Moon River, sitting on an old ceiling at $1.90. I think it's possible that this could be a miniature version of the bigger the base, the higher in the space. Now, it's not exactly a big base. Moon River has been sitting on this old August high for about a month. So if Moon River holds above 190, which is roughly where the 21-day moving average is, Moon River could probably go up if 190 acts as support. Now, could you have to wait a week? Maybe. Could you have to wait a month? Maybe. But obviously, Moon River is a lot better a buy at 190 when everyone's given up than when it was in FOMO mode near 350 and 400. Okay, somebody was asking about Dodo. Again, sort of slammed, but has the dynamic around the 21-day moving average changed? Now, this is available on YouTube all the time, and we appreciate you checking in, and we would appreciate it that you would hit the like button like all the time on your phone and your computer. So for Dodo, if it bounces off 88 cents, it may be an indication the trend has changed. With something like this, you need some evidence that there's a buyer at the 21-day moving average. Okay, Avagochi, been doing this upward sloping accumulation cone, and I'm guessing that if this thing's going to go up, it's going to hold 260. So if you want to shoot your shot, try it at 260. If it doesn't work, put a stop in. Right? If you're going to make money in altcoins, okay, the first quarter of this year or between now and sell in May and go away is when you do it. And if you can get good projects at good entry points, then you want to be acting on that. Arweave, someone asking for Arweave on top of the 21-day moving average at 56. Seems good support there, okay? In the past, when you break above the 21-day, come back and hold, Arweave has been able to go up. So, I mean, buy or sell or bullish or bearish, I would lean more bullish on Arweave, not investment advice. Now, somebody mentioned much higher prices in Curve. Not sure if this is a technical analysis type of coin, but I do notice a really interesting diamond formation, right? Curve broke out of the diamond formation around 5, and I don't see any reason why this can't go to 10, assuming it's the type of coin that you would actually card, unlike, say, Olympus or Wonderland. All right? Harmony, a smart contract platform, may be making a stealth breakout above a Gantt point at 270. Really interesting how it kind of broke out and then just sort of sat there on 27 cents. This may be something that's taking off. The better buy is probably at 27.2 cents, right? That's probably where the best buy is. But if it holds and starts taking out 30 cents, you could get the start of a momentum trade higher. Reef, okay? Reef, not exciting, gotten killed. Looks like everyone is kind of given up. There's support at, 0.0175. So if you've been holding it, well, let's just see what happens. If you wanted to buy it, I don't know. If you can't buy it now, you can't buy it at all. Okay? So it's not a super bullish chart. Okay? But, it paid to buy Chainlink when it was destroyed. And I think Chainlink is an example of like buying stuff when stuff is destroyed. Because if it's ever going to come back, if it's ever going to do something, it's going to do it in this quarter, or you got to wait till much later. All right. So if you're long and you're trapped in this, then maybe give it a couple days to see if buyers come in. Okay. OMG. Okay. Very interesting how sort of crushed this got. Right. I'm interested to see how it responds to the 21-day moving average near $6.15. Doesn't look particularly bullish, but the theme is look at stuff that's down. Either look at stuff that's down that has a story that you like, or something that's broken out above the 21-day a little bit, or something that broke out above the 21-day a lot of bit and came back down. Or if you're a tokenmetrics.com subscriber, you can look at something that has broken out, come back to support. And if those AI indices still like going back to year in finance, then you got to grab it. So if Forrest gives you a chart level and the AI still likes it, you know what to do. And that, folks, is altcoin overtime. All right.
All right. Thanks, Bill. Do you want to, what do you say we jump into a quick Q&A session?
Yeah, sure. Take a couple.
All right. First question up is not a question, just says Happy New Year, guys. Moon Mission 2022. Thank you, guys. What is the best method for short-term trading, TM grade or indices? Personally, I would say TM grade. What would you say, Bill? Well, that's a tough one, actually. I think why not look at both, right? You have access to both. Look at both.
Yeah, I mean, I would say if you're in an uptrend, the TM grades are wonderful, right? I think if you want to know, like if you want to stay specific to say Coinbase Pro or Kraken, I think it's the indices, right? So the rankings can help you with the small caps, particularly when an uptrend is accelerating. So if you have an accelerating uptrend, ratings. If you have a slow uptrend, okay, or you're stuck with Coinbase and Kraken, okay, indices.
All right. Next question is thoughts on going all in on the Luna ecosystem. TVL is through the roof in so many ways at different risk levels like synthetic equities, staking, stablecoin yield trade. Yeah, so Luna's phenomenal. I would, again, not financial advice here. I would shy away personally from going all in on any one layer one solution. The reason being is because you do expose yourself to a small amount of smart contract risk. And what that means is, what if Luna were to get hacked? It would affect negatively everything on that chain. And while that's incredibly unlikely, there was a bug found in the Polygon smart contracts. I'm not a developer, so I don't know exactly how to explain this, but the gist was that there was a bug found in Polygon that had a hacker found it first before the team found it, or before it was brought to the team's attention. Something like billions of dollars worth of Polygon was exposed to being hacked, right? And that's Polygon, a phenomenal project. And it's a very good thing that hackers did not find that first. However, those things do happen. This space is very, very early. Now, hacks are much less common than they were a year ago, 2, 3, 4 years ago. Everyone's security's gotten much better. In all likelihood, Luna will not be hacked. It's very unlikely. However, there's still a small chance. And if you are somebody who had 100% of their net worth or their 100% of their crypto portfolio in the Luna ecosystem, you're exposing yourself to the possibility of losing everything. So I would personally be somewhat diversified. Now, if Luna is 50, 60, 70% of your portfolio, or the Luna ecosystem is that much of your portfolio, you probably do fantastic. You'll probably do really well. But you may want to introduce some diversification for the smart contract risk alone. Which do you give most weight to in your market analysis? Total market cap 2 or total 2, so that's not including Bitcoin. Total 3, which is not including Bitcoin or ETH, or Bitcoin dominance. Personally, I look at altcoin dominance, which is the inverse of Bitcoin dominance. So it's essentially the same thing. It's just the same chart, but flipped. And I actually look at total crypto market cap. I like to include Bitcoin. I like to look at all Bitcoin included with all altcoins. That's just a personal preference. You could look at multiple. Personally, I just feel like it's all in one chart is easier than looking at multiple charts. I would feel the need to look at total 2, total 3, and maybe total crypto market cap. But if I can just look at total crypto market cap, that gets me 99% of the way there most of the time, and I feel pretty comfortable with that. What about you, Bill?
Okay, so regarding Luna and whether you should go all in, okay, you should never go all in unless you're looking at a market that's been totally destroyed. So if risk assets as a whole get really hurt, say in October, and everything is like marked down dramatically, that's when you can push a lot of chips in. All right, you can be overweight, you can trade but you don't go all in, I don't think, on anything. As far as total 2 goes, I actually look at them all. I think the best one to look at right now is total 3, because I'm dying to see whether or not the non-Bitcoin and ETH universe can take out 1 trillion, right? I think if it can, that can ignite a major speculative wave in the first quarter. Now, if not, then the major speculative wave comes later. Or maybe it's in NFTs in the metaverse. But I think that the indicator for this year, like Forrest has his altcoin dominance, I'm looking at total 3. To take one question, Jose is asking about layer zeros. Yes, we do like layer 0. We like Cosmos. We like Polkadot. There's a video on our YouTube called Making Money with Layer 0. Okay, I think it was one of the videos of the year. You want to go check that out. If you've got Token Metrics TV as a subscriber, that's like our personal Hulu type service. You can check it out there. Back to you.
Yep. So the next question is, how dominant will play to earn games be going into Q1 and Q2 as far as the metaverse is concerned? Personally, I think the play to earn model is here to stay, and I think it will dominate. And the reason being is it adds a layer of inherent value to the underlying NFTs that are in those metaverse games or in those games. And what I mean by that is, if you can own an NFT, and we'll probably talk about this in future streams because it's something that is a cornerstone of my personal NFT strategy, is I want NFTs that have an income stream associated with them, whether that's through playing the game or through renting out the NFT or some other form of a revenue stream attached to that NFT. Why? Because that vastly, greatly reduces the risk of owning or purchasing that NFT. Let's say you bought an NFT for $50,000, but that NFT has a revenue stream associated with it through a play-to-earn game mechanic of about $1,000 a month, meaning that NFT could earn you $1,000 a month if you play the game. Well, a lot of these games are going to have renting mechanisms where you can rent out that NFT to other people to play the game and earn money with that NFT. So RumbleKongs, for example, I believe will be bringing that particular the revenue stream or revenue model to their NFTs. Well, let's go back to the numbers. $50,000 NFT, and you're earning $1,000 a month off of it. After a year, your risk is no longer $50,000; it's $38,000. Your risk is significantly reduced. For me personally, I am not an art connoisseur. I am not somebody that's going to go in and try to value an NFT just based off of the artistic component alone. Nor am I going to feel comfortable owning an NFT that doesn't drive revenue for me, doesn't bring revenue, because as long as it has a revenue stream, it has an underlying inherent value. And yeah, so I think the play to earn gaming model brings those revenue streams into those NFTs. And I think for that reason, they will be attracting a lot of players, right? A lot of players, as long as the games are good, then yeah, they're going to attract players and more money. Any thoughts, Bill?
Sure. So I think metaverse, art, okay, enjoyment, right, are going to be the sources of, frankly, massive speculation at some point this year. Now, hopefully it's in the decentralized world where people play games that are fun, where they can earn yield, okay? Metaverse plays are going to come back. I don't know whether it's now. I'm kind of hoping it's a first quarter phenomenon. But art, NFTs, metaverse, virtual reality are going to be places to make a lot of money, because you may want to be long all that and short stuff like stocks and other things that are going to go down on sell in May and go away. So it's almost like you have to separate it out. Where's the art? Where's the game? Where's the fun? If you can find the fun and get yield doing it, that's the play. Naturally, you want to stay tuned by subscribing to this channel, because our analysts me and Forrest are hard at work finding the plays that are going to go up, large cap and small cap, in NFTs, virtual reality, and the metaverse, because there's a trade there on the long side, regardless on what happens to risk assets at some point during the year. Back to you.
All right. So someone was asking about Opulus and if we've looked into it. I believe we have. I don't remember exactly what it scored on fundamentals. It may have been in a newsletter a while back. I do think that I believe we are creating a searchable database on Tokenmetrics soon that'll have all of the scores for you to look back on. I don't know the exact time frame on that though. All right, so this is probably going to be our last question we have time for here. It's a really interesting one. Hey, Tokenmetrics team, I am starting a portfolio for my daughter's future with a 10 to 15 year outlook. I already have ETH, but what other coins, specific or sectors, would you recommend? Not investment advice, of course. This is a tough one because this is like go back to 1997 and what would you invest in, in 1997 for your daughter's future in 15 years in the mid 2010s? Well, in hindsight, Apple and Google, and Microsoft, Intel maybe, but even so, hindsight's 2020. It's really difficult to tell what now is still going to be around in 10 to 15 years. That's a very, very tall order. The landscape of tech is going to change a lot, right? And the first iteration of technology, oftentimes, for a while, Blockbuster was just a phenomenal business model. It's great. Now they no longer exist. A lot of people got really wealthy on Blockbuster, right? You could have the best, the safest job back in the early 2000s was to own and manage a Blockbuster. Now it's no longer around. So there's going to be a lot. I would venture to say 90% of what we're trading and what we're talking about today won't be around in 15 years. You're not going to, or let alone in the top 100, right? There's a chance that Ethereum, and I'll say it, excuse me, I'm a huge Ethereum fan. There's a strong chance in 15 years, in 2037, Ethereum will be a thing of the past. I hope not, because I own my fair share of Ethereum. I hope it continues to be the backbone of DeFi and decentralization. But we're talking 15 years from now. So the one thing that I would say regarding putting a portfolio together for 15 years down the road is to not just let it sit for 15 years, not to just, buy a little ETH, buy a little metaverse, buy a little Decentraland, and just forget about it for 15 years. Now that sounds good when you say, hey, in the 1990s, if you would have just bought Apple stock and forgotten about it for 15 years, you'd be rich. Well, yeah, of course. That's after we've seen the success of Apple. But there were a dozen other competing stocks, competing companies that you could have just as soon picked and picked wrong with. So I think, ETH is obviously a good start. You may even want to throw, I'm not crazy about Bitcoin, but when you're talking 15 years down the road, you may want to throw a little Bitcoin in there. I think something that Bill and I talked about earlier today that's going to become a bigger and bigger narrative is just hard currency plays. Digital cash plays. I think those are going to be incredibly robust and hold a lot of value long term. And I think that's they're one of the things that are incredibly difficult to replace. Once you've gotten people a user base to start adopting them, take Bitcoin, for example, it's really, really difficult to change people's mind about Bitcoin not being the most robust or not being the most usable cryptocurrency, in the sense that it's not extremely fast in terms of transaction times, right? It's very, very secure, but the transaction fees are kind of cumbersome. The network can get bogged down, right? There's arguably better, faster cryptocurrency, hard digital cash solutions than Bitcoin out there. But because Bitcoin has such a strong user base, it's really difficult to change people's minds about Bitcoin. And that's why I think some of these hard currency plays could be really, really good long-term plays. Whereas stuff like smart contract networks, stuff like Solana, stuff like AVAX, stuff like Ethereum is at risk of maybe getting replaced by a better mousetrap 5, 6, 7 years down the road, right? everyone's been calling, Solana and AVAX Ethereum killers. Well, I mean, there's a strong chance that Ethereum does get killed in the next 5 to 10 years, right? Now, I'll be there when that time comes to adjust my portfolio accordingly, and I would hope that everyone else does as well. But all that to say, I think some of these hard currency plays, hard money plays could really pay off years down the future. That being like Bitcoin. Even stuff that are considered really not popular right now, even stuff like Litecoin, stuff like Nano, stuff like Bitcoin Cash, Dash, these pure hard money digital cash solutions, I think can actually hold their value decently well in a long-term time frame. All right. So, Bill, what do you think?
Okay, so on that note, there is such a thing called layer zero, betting that there'll be an internet infrastructure where, blockchains will be connected to blockchains. So right now that's like Cosmos, Polkadot, and any other layer zero that comes out, right? So you don't know which layer one is going to win, but, it may be easier to pick a layer zero. Now, to Forrest's point, 15 years from now, let's just use common sense. If you go to an airport and you walk up to the currency exchange booth, how many choices do you have? I don't know. You got the Swiss franc, the euro, sterling. You've got the South African rand, the Russian ruble, the Brazilian real, the Japanese yen, the Chinese yuan. I mean, it's endless. Well, right now in crypto, you use ETH to buy NFTs and the metaverse and do some DeFi and pay gas fees. You use Bitcoin as kind of the hard money, future of money trade. And that's it, right? In other words, 15 years from now, why wouldn't, I don't know, Bitcoin Cash, Nano, Stellar, Tezos, any Dash, anything that's out there that's getting used as money? In other words, will the Bitcoin network, a lot of people say, oh, Bitcoin is going to become the new world's reserve currency. I'm like, okay, I mean, I'm down with Bitcoin doing well, but can the Bitcoin network seriously, single-handedly cope with every transaction that has to occur in global trade the way the SWIFT system does with the dollar? I don't know, but if you went to Coinbase Pro and you looked up and said, I don't know, could this particular currency or payment system, right, be used in the future? In other words, is the hidden gem hiding in plain sight, right? Because what's the only thing that makes sense long-term is better money. Now, that could be ETH, that could be Solana. You don't know, but I would build a portfolio around what Forrest talked about. I'd have the future of money, layer zero, and then, I don't know, go into the NFT universe and say, would my daughter or son think this is cool or cute in 16 years? And, spend no more than $250 on it and put it in a MetaMask wallet. In other words, money, internet, lottery ticket, not investment advice.
All right. That's going to be our last question. Bill, do you want to wrap us up?
Sure. All right, folks, we appreciate all y'all today. Everybody who gave us some love, thank you. Thank you for being here. All right, we appreciate your viewership. If you're watching this and you got all the way through it, please hit the like button. Give yourself a like. Give us a like if you're watching it on a recording. All right, at Token Metrics, we pride ourselves on being real analysts, providing you both human analytics and AI and machine learning. So, Javez, thank you. Crawford, we wish you well. All right. People asking about Cardano, I'll be here tomorrow, and I'll be sure to do Cardano. So that's it for today, folks. Best to all of y'all in 2022. This is Bill Noble from Token Metrics. We will see you tomorrow.